Welcome. One of the most exciting things to hunt for in the market is a true comeback story. We're going to dive into how traders spot stocks that have been pushed down maybe a little too far and could be ready for a big snapback.
So that's the big question, right? In a sea of red, how can you possibly tell the difference between a stock that's just having a bad day and one that's in a real downward spiral? Well, to find those hidden gems, those stocks that might be unfairly beaten down, a lot of traders start with one very specific tool. And that tool is called the Relative Strength Index, or RSI for short. The easiest way to think about it is like a momentum meter for a stock. It's built to measure just how fast and how dramatically a stock's price is changing, all to figure out if it's been overbought or, what we're looking for today, oversold. Okay, so technically, what is it? It's called a momentum oscillator. Sounds complicated, but it's not. It just takes all the recent price gains and losses and boils them down to a single number on a scale from 0 to 100. The whole point is to give us a quick read on whether a stock's price move is getting a little too extreme.
Here's a really cool way to visualize this. Picture a stock's price being attached to a rubber band. When the price falls hard and fast, that rubber band gets stretched super, super tight. The RSI basically tells us just how stretched out that band is. And you know what happens when you stretch a rubber band too far? It has a tendency to snap back.
And for us, it all comes down to one magic number, 30. On that 0 to 100 scale, anytime a stock's RSI dips below 30, that's the classic signal. It's like a flashing light for traders that says, hey, the selling here might be getting a little overdone. This thing could be undervalued.
All right, so enough with the theory. Let's see how this actually works in the real world. We're going to pull up a watch list of 10 companies whose RSI just recently dropped below that critical 30 level.
Okay, so here it is. This is a quick look at 10 stocks that are currently flagging as oversold. You can see all the key info here, the ticker, the company, its price, and market cap. This gives us a really fascinating cross-section of what this signal can dig up. And this right here is what I find so interesting. Look at how different these companies are. This isn't just a list of one type of business in one little corner of the market. The RSI signal can pop up literally anywhere, from huge household names to tiny companies you've probably never heard of. It's all about the momentum, not the size.
I mean, just look at this contrast. It's wild. On one side, you have Goodyear Tire and Rubber, a company everybody knows with a market cap of almost $2 billion. And on the complete other end of the scale, you've got Work Medical Technology, valued at less than $5 million. They couldn't be more different. Yet here they are, on the same list, flagged by the exact same indicator.
And let's just stick with Work Medical for a second. Look at that number, a drop of over 22% in one day. Wow, that is exactly the kind of sudden, sharp move that stretches that rubber band we were talking about and sends the RSI plummeting into oversold territory.
Okay, so we've got this really powerful tool. We've got a list of potential candidates, but hold on, before anybody gets too excited, we have to zoom out and look at the big picture. Because an oversold signal is a starting point, not a finish line. It's absolutely crucial to understand what it's telling you and what it's not. This is so important to remember. Just because a stock is oversold doesn't mean it can't become even more oversold. The RSI is just one piece of a much larger puzzle. You have to ask the most important question of all. Why is the stock dropping? Is it just a temporary panic, or is there a real fundamental problem with the company?
And really, that's the bottom line. The RSI is a fantastic tool. It's great for putting stocks on your radar that might deserve a closer look. But you absolutely have to back it up with good, old-fashioned research into the company's health, its industry, and what's going on in the broader market.
Which really leaves us with this one big question to think about. When you see that RSI dip below 30, are you looking at a red flag, a warning sign of deeper trouble? Or are you looking at a rare opportunity to find value where everyone else just sees fear? The real answer, of course, is in the homework you do next. Thanks for tuning in.